Hello everyone. In the earlier sessions we discussed about some of the basic concepts related to the head of income, salaries, including the definition of salary under section 17(1). Also, we discussed about particular areas of taxability related to salary or remuneration received by a partner from the partnership firm or similar situation in relation to CEO or managing director of a company or a sole proprietor receiving salary from the same sole proprietorship concern that he owns. All these aspects we discussed in the earlier session. Also, one of the important aspects, whether certain amounts are taxable under this head or not. For example, MPs and MLA salaries are not going to be taxable under this head, whereas judges' salaries are going to be taxable under this head. Like that, we have observed and understood some of the examples related to, we can say, scope of this particular head of income, which will be important, particularly if such questions, case-based questions are asked. Otherwise, normally for the regular problems, we will not face any issue in identifying which head of income a particular income is supposed to be taxable in. However, before entering into the core provisions of this chapter, we need to start with charging section. Like any other head of income, salaries also has a charging section, that is section 15. Also that can be called as the basis of charge. The content of it already we have discussed. We are only just going through the definition of it and what is the essence of section 15. What are the things? What are the types of incomes that shall be chargeable to tax under the head of salaries? Of course, any salary due, whether received or not, is going to be taxable. Same way, any salary received or allowed, whether due or not, is also taxable. And not only that, any arrears of salary not charged to tax in the earlier years shall be also taxable here. So here we have to understand, arrears of salary is one word which is used. What is the meaning of that and in what sense we have to apply that? Normally what happens, particularly for government employees, is they'll have certain basic pay and they'll have some other allowances, including dearness allowance, which we popularly call as DA. Ideally, the dearness allowance is given for meeting the additional expenses that are going to be incurred by the employees each year because of inflation. Of course, that is the purpose. Dearness, in that word, dearness allowance means expensiveness. You can use the word dear in different contexts. Here the dearness is not about closeness, intimacy. No, not that dearness. Employer is very dear to employee. No, not like that. So don't misinterpret the words. Dearness allowance is not that. In English, sometimes when you want to express that, let us say so and so product has become costly, you would have heard this also. For example, petrol prices have increased. So there is another way of expressing it. People call it, usually the Britishers call it like that. They call it, the petrol has become dearer. So it has become dear. So dear there means expensive. Dearness means expensiveness. In order to meet the expensiveness of the normal living expenditure, usually dearness allowance is given, which will have its own increments every year. For example, certain years they might increase the DA by 8%, Certain years they may increase the DA by 10%, depending upon the actual inflation in the economy. Of course, we are not bothered about how much DA to be given to the employees. That is the decision of employer. Particularly in this case, we are talking about government employees or government companies employees generally will be having such type of arrangements. Okay, dearness allowance is given to them. But when there is an increase in the dearness allowance, usually there will be a time gap between the date on which the DA is supposed to be increased and the date on which the DA is actually announced. So, just to take an example, say on 1st of January, DA is supposed to be increased, but government, we know how it works, might be not actively focusing on these deadlines. Maybe somewhere in April or May, they will wake up and say, okay, DA is going to be increased this year by so and so percentage. Announcement comes in May. However, that implementation of announcement, or we can say the calculation related to the announcement, will be from 1st of January. In other words, the calculations have to be done retrospectively. That is called retrospectively. So in this example, say the government has announced an increase in DA of whatever percentage it wants with effect from 1st January, but announcement came in, say May 31st. End of May, announcement has come, but the effect of that is supposed to be given from 1st January, let us say of the same year, what we are now, 2020. This is all example. So here effectively what happened, the financial year 1920 is already over. The employee, whatever the income he has earned during the financial year 1920, which is the previous year, is already known. But while calculating the income of that employee on 31st March 2020, can the employee dream that government is going to announce this much of DA, or I might get an increment of this much? Not possible. So the question now comes, whatever the DA related to the months of April and May, there is no issue, because anyway they are related to the year 2020-21. That means which are taxable in the previous year 2021, assessment year 21-22. No issue with that. What issue comes with, what about the DA increment which is related to the period between January to March? That period related to which it is January to March. But when we know that in May, so what should we do to this 3 months DA increment? Should we include it in the income of the SSC for the financial year 1920, or should we include it in the financial year 2021? There comes the doubt. The answer is second one. That is what we call arrears. When an increment has been announced retrospectively with effect from a past date, all the calculations will have to be done from the past date till the end of the financial year, or whatever that is received on, and that will be taxable on receipt basis. But of course, is this entire amount related to the previous year 2021? No. In this 3 months increment was related to financial year 1920, 2 months is related to financial year 2021. Even then, the entire amount of arrears related to this 5 months increment because of the retrospective calculation of the increased DA will have to be taxable when it is received. Let us say if this is received in June 2020, entire amount of arrears will be taxable in the financial year 2021 only. But of course, was this arrears related to the 3 months of January to March charged to tax earlier already? No. How can it be charged to tax? We could not have dreamt that at that point of time. Not possible. So it was not taxed then, but it is taxed now. So what we can conclude from this? Arrears of salary is also taxable on receipt basis. Here, due will not be important. To which month this is related to is not important. This is an example we have taken for simplicity purposes. But practically, if any of you have your parents working in the government or government corporations, sometimes it may so happen that these retrospective calculations go back to even 2-3 years. Still, it has to be taxable in the year in which that arrears are actually received. So here the due and the year in which it is actually or supposed to be given doesn't matter completely. So it is completely taxable, arrears of salary, in the year of receipt. Though it is related to earlier years, still it is taxable in the year of receipt on receipt basis, not on due basis. That is a point to be noted related to arrears of salary. These two words are important. Arrears of salary, advance of salary. Logically speaking, arrears of salary are related to the past but received now when they are taxable. We cannot go back in time machine and tax them. So they have to be taxed now only. No option. Then what about advance salary, which is related to future but received now? When should that be taxable? That also should be taxed now only. We cannot wait till the future because salary is taxable either on due basis or on receipt basis, whichever is earlier. So cash basis or due basis, whichever is earlier, is what section 15 particularly talks about. And that is the timing of when taxability of this salaries arises. Now, along with this discussion, we have to identify some of the words which are definitely useful in this chapter. For example, we just used dearness allowance as one of the words. It's an allowance. Allowance is always about money. Why is it given? Could be for different purposes, but that is only name. Ultimately, what is given is money. Dearness allowance is one name of one kind of allowance which is given by employer to employee for some purpose. Purpose will be there, but again, we don't know whether the employee uses it for the same purpose or not. So that matching is not possible. For example, if dearness allowance is given, why is it given? Generally, it is given to meet the inflation. Is it really meeting the inflation? How do you know? Can you go to each employee's house and check that whether he is using DA money for inflation? First of all, it is not possible to segregate money. So, when an employee receives in his bank account, generally nowadays, a monthly salary, that includes all these things. That includes basic salary, that includes dearness allowance, or any other allowances. All of them will be there as part of that. But what he is receiving, actually, what is receiving is money. When the employee takes his family to a movie and spends 1,000 rupees there, you cannot say whether he is spending that 1,000 rupees from basic salary or from DA or from which allowance. Is there anything called movie allowance? Even if it is there also, can you segregate that? Not possible. So it doesn't matter. The point is money is coming from employer to employee. But while giving that money, employer will give 100 names to that. For some part of the money, he calls it basic. For some other part of the money, he calls it DA. Some other allowances also can be there, something like house rent allowance, HRA. Like that, many types of allowances are there, which we will discuss in the allowances part of this chapter. But this terminology, we have to be clear, and we should not unnecessarily think that these are going to be exactly spent for the purpose for which they are meant for. These are only names. Underlying thing is always money. So that is practicality, the reality of when an employer gives any money to employee, what he calls it is actually immaterial in real life. But it matters for income tax purposes. If he calls that basic, that is a different story. If he calls it DA, that has its own impact. We will see why is that, how is that. So the allowances are the names of the allowances, purpose of the allowance, practically in real life may not be really relevant. But for income tax purposes, they are relevant. That is the reason why we need to be very much conversant with these words. So basic is some amount, the core amount that employer gives to the employee. As the name itself indicates, it is basic salary. That is a basic emolument that employee gets from the employer, we can say. Over and above that, some employers may give dearness allowance also, which is popularly called DA. That is dearness allowance. Of course, it doesn't matter, end of the day, both are taxable, both will be included in the total income of the employee as usual. That is all same. Only thing is name is different. Employer is giving with different names. That matters to us. You cannot say, how does it matter, sir? End of the day, all are money only. No? Yes, all are money only, but that is in the real life, not for tax purposes. In tax computations, when you compute the income from salaries related to an employee, we need to be very specifically giving treatment to each category of income that he is receiving from his employer, and the names of all of them can be completely different. So we should be well versed with those names, is what is the point here today we need to understand. In the same pattern, we have touched one of the words that is called arrears of salary. Arrears of salary is related to past, which was not taxed earlier, but because the information about that is only known now, because the calculation has been done retrospectively and the employer received a lump sum amount, that arrears of salary is taxable in the year of receipt. That is a point to be noted. And what about advance? Advance also similar. Advance means what? Advance salary means the salary related to the future, but employee has received it in advance from the employer. That is also taxable on receipt basis. So, arrears of salary also, advance salary also. Both are taxable in the hands of employee in the year of receipt. That's it. That's a important terminology in this chapter we need to be clear about. Also, the commonsensical point we already know, I hope, is that any income cannot be taxed twice. We know that. For example, if any salary earlier which was taxed as advance salary, and how it was taxed? It was taxed on receipt basis earlier, because last year employee has received some advance from the employer and already he paid tax on that because that was included in his taxable income. Advance salary was already included in the taxable income of employee in the last year. But that was related to which year? Current year. So can we include the same thing once again now on the due basis? Doesn't make sense. How can you tax the same income again? Not possible. So the essence to be understood once again here, salary is taxable either on cash basis or on due basis, whichever is earlier, but not both. It cannot be taxed once on cash basis and once again on due basis. No, that is wrong. Same way, it cannot be first taxed on due basis, again taxed on receipt basis. That is also wrong. Only once any income can be taxed. Salary is also same. That is why either if first it is received, if at all, then it is taxable on receipt basis. If at all, it is earned first now, but though it is not received, still it is taxable on due basis. But not both. That has to be always kept in mind. That is advance salary, arrears of salary related points. Of course, the other point like salary, bonus, remuneration received by a partner from the firm is not taxable under the head of salaries. Rather, it would be taxable under the head of PGBP. That one we already know. There is nothing new in that. That's a known provision already. Then let us understand what is the core structure of this particular chapter, salaries. Of course, as far as the Income Tax Act is concerned, Income Tax Act is not going to have headings and chapters like this. We are all doing it for our convenience. It just tells us the heads of income's names, that's all. But what are all the contents of the heads of income? For example, the head of salaries will not be contained at the same place in the Income Tax Act. Those all will be scattered throughout the Act somewhere. While learning that, we will bring all of them together, because those are all applicable for the SSCs who are having a taxable income which could be taxable under the head of salaries. We need to bring all those provisions at one place and learn them. They will not be sequential. They will be scattered throughout the Act. Quite possible. So that is why, while learning the provisions related to the salaries, actually the provision related to the salaries is already known. This is a huge head of income, but the core of this is already known. Salaries is taxable, that's it, there ends the matter. What else is there to discuss? Somebody received salary from his employer, that's all. That is taxable income. Then what is there to discuss further about it? It looks like that, but it is not. Why is it not? Because we are not talking about the taxability of incomes here. Taxability is only one part of it, which we already discussed, which is nothing but scope of this head. And of course also the charging section related to this head. Scope of this head is already there in the definition of salary. Charging section is already there in the section 15. So, this chapter, basically when we talk about the taxability, these are the only things. Already 17.1 has told what are all things which are taxable under this head. There ends the matter. And already section 15 told how it will be taxable. There ends the matter. Then what is this entire chapter that we are going to learn about? Really the core provisions are yet to come. What are those provisions? Are they going to be about taxability of anything new? No. Definitely not. That is why we should understand, or we should conveniently segregate this chapter for our convenience. Not that Income Tax Act has done that. Act will not do that. For our convenience, for our learning ease, we can classify, we can segment this chapter into 3 categories. First segment is, first, second, third, there is no sequence like that. Any segment is segment. But whatever it is, there are allowances, there are perquisites, there are retirement benefits. 3 major segments we can classify this chapter into. Fourth one, if we want to add, we can add the Provident Fund related segment also. Though it is a small one, yes, it is also a separate segment. So broadly, these are the 4 things that will be there in this chapter. In addition to which, there will be deductions which are allowed under this head of income. One of them already we know. What is that? Section 16(1)(a). That is standard deduction of 50,000 rupees up to is allowed flat for every SSC who has an income under the head of salaries. So that is a standard flat deduction of 50,000 maximum. Always we have to understand that also, maximum, why we are talking about it. Because the deduction can never exceed income. And already I told you, salaries cannot be having a negative income at all. Not possible. That just doesn't make sense. Salaries cannot have negative income. Either it is 0 or positive. For example, if somebody has an income of salaries of 40,000 only per annum, standard deduction cannot be given 50,000. How is it possible? It will be 40,000 only. So that is why maximum 50,000 is the standard deduction. So one of the deductions already we know. And we are going to know some more deductions under this head of income. So broadly, the bigger segments of this chapter are 3. But if we include the smaller ones also, it is all 5. So what are those? Allowances, perquisites, retirement benefits, and Provident Fund related provisions. Even already Provident Fund related provisions, half of them we already know. Nothing new in that. Only few items will be added, which we will come to know later. And deductions, that's all. This is the chapter of salaries all about. Basically, whatever is called salary or any other dearness allowance, that is all taxable. For that, we don't need a great provision. It is taxable already automatically. Then what about all these segments? Why do we have these many segments? Why do we have these many provisions, these many sections in this head of income? That is where we have to understand the difference between one segment and another segment. That is why we are conveniently dividing it into segments so that we can approach each segment according to the requirement of that segment. Say for example, allowances. Allowances means what? Once again, money given by employer to employee for meeting certain purpose. Whether employee meets that purpose with that money or not cannot be traced, cannot be tracked. That we are not interested in that. So what about allowances? What should be the segment information about? Of course, allowances are taxable. What is the big deal in that? No. They are not fully taxable. So what is the big deal about that is, there are many allowances which have certain exemptions which are specified in the Act. Once again, whenever we use the word exemption, our mind should go to section 10. Absolutely right. Even the exemptions related to allowance also are contained in section 10 only. One of them we know, section 10.7, that is about allowances received by an Indian citizen working abroad for the government of India. Those are exempt. We know that. But that is only one particular category, very special category person. Like that, there will be so many people normally working and every month they are receiving allowances. What about them? There are exemptions for them also. Not like blanket exemptions, but there are exemptions conditionally. There are exemptions which are based on certain calculations, and there are exemptions which are given flat amounts by law. Whatever the reason may be, whatever the purpose may be, ultimately we need to understand one thing. When we say allowances, we are not bothered about allowances as such. Allowances are basically taxable. There is nothing to discuss about that. Allowances are taxable. There ends the matter, normally speaking. But we cannot stop there. Why? Because there are allowances which are exempt also. So what are we going to learn here in this chapter? In the segment of allowances, simply speaking, exemptions. That too we are not going to have many sections there. We are going to focus on majorly two types of exemptions. Section 1013A talks about the exemption of HRA, house rent allowance. How to calculate that is described in section 1013A. That we will discuss. That is a special provision. Involves calculations, definitely important in problems also. That is one exemption. And all the other allowances, so many types of allowances are there, all of them put together. The exemptions related to them are all given under section 1014. That's it. Within that, there are a big list of allowances. Some are exempted, some are taxable, some are partly exempted, partly taxable. Like that, all these combinations will be there in section 1014. Of course, when we say section 1014, it is an exemption section. Section 10 will never talk about taxability. Always it talks about exemption only. Question is how much exempt? How much exempt automatically also means how much taxable. If this much exempt, remaining is taxable, right? So it's an inference we can draw from exemption related sections. Under the head of salaries, majorly two sections, section 1013A and section 1014. That will conclude the allowances portion of this chapter. Allowances is about nothing but exemptions of allowances according to section 1013A and 1014. Then comes retirement benefits. Allowances generally are some things which are given periodically while the employee is in service. Employee is still working and he receives allowances every month as part of his salary, generally speaking. But that is anyway taxable normally and exempted if it is exempted so specifically by the Income Tax Act. That is fine. What about retirement benefits? Name itself indicates. Retirement benefits are those which are received by the employee from the employer upon retirement. And in general, except pension, in general these will be lump sum amounts. Gratuity, for example, leave salary, names we have already touched. But the details of them we are going to discuss later. Gratuity, leave salary, like this, retrenchment compensation, voluntary retirement compensation, many other types of retirement benefits can be there to the employees upon their retirement. Once again, what is the big deal about them? You make them taxable, that's all. If that is the case, there is nothing for us to discuss. But it is not the case, which means there are certain things to be understood about retirement benefits also. Naturally, once again, what is there to discuss in that? Basically, they are all taxable. Then what is there to discuss in that? Same thing. There also we need to discuss the exemptions given for retirement benefits. So, though we just say the segment name allowances, retirement benefits, basically what we are going to discuss is exemptions for allowances and exemption for retirement benefits. That should be the ideal heading of it, but we should know that. So, both the segments, whether it is allowances or retirement benefits, talk about exemptions only. And there are many exemptions with retirement benefits also, starting from section 1010 and then 1010A, 1010AA, 1010B, 1010C, like that. 1010CCD later comes. So many are there. So retirement benefits particularly are related to the exemptions which are allowed by the Income Tax Act upon the retirement benefits that the employee receives after the retirement, in general, which are lump sum in nature. Exemptions are given only for lump sum amounts. Periodic amounts are not exempted, and we know that already. The pension, for example, which is a periodic amount, that is taxable. That doesn't have any exemption. That is taxable, just like normal salary. So these are all different combinations we already discussed. It doesn't matter whether salary is received from the present employer, past employer, future employer. Doesn't matter. It doesn't matter whether the salary is related to the current financial year, past year or future year. It doesn't matter. So in all cases it would become taxable. Also it doesn't matter whether the employment is full-time or part-time or whatever it is. Doesn't matter. Whether the salary received from one employer or two employers or 44 employers. Doesn't matter. So all these things do not matter. All are taxable. Basically everything is taxable, taxable, taxable. That is core. So what are we going to learn here? This entire chapter is about exemptions. Particularly the segment of retirement benefits and the segment of allowances is all about exemptions. Those are the two important segments. Of course, the context will be different. In case of allowances, we are talking about a person or SASI who is in service, who is working. In the second segment, retirement benefits, we are talking about an SASI who has retired, who is not still yet working with the employer. He has already retired. He has parted himself from the employer. So that is retirement benefits. Simply both are exemption related provisions only. Then comes the third segment, perquisites. Then what is perquisites? Logic or the concept of perquisites we discussed already. What is that? It is simply any kind of benefit or a facility or an amenity that is provided by the employer to the employee in kind, not in cash, in kind. In general, that's what it is, a perquisite. But is it exactly the definition of perquisite? No. There are other things also which can be called as perquisites. We will see that later in the perquisite segment, where the perquisites are going to be defined under section 17.2. Salaries was defined under 17.1, which we have already discussed. We will discuss 17.2 under the segment of perquisites. But in general, what perquisites mean? These are all about some benefit received from employer, received by the employee, not in cash. So in general, these are non-monetary items. That's what a perquisite generally means. Then what is the problem for us? Why do we have a separate segment on that? Is there a problem for perquisites? If you think about it, yes, there is a big problem. Because in income tax, the calculations are all monetary. If the employer gives a house to employee for accommodation, for his accommodation, and he also gives, let us say, 1 lakh rupees salary to him also, we will say 1 lakh rupees is taxable salary, fine. House, what will you write in the calculation? You cannot write house, right? Not possible. So, because all these perquisites are non-monetary items, they are not in the form of cash in general, it becomes our responsibility to convert them into monetary terms. So, house is given by employer to employee, fine. But our job will be to find out what could be the taxable value of that facility. That is why we call this segment as valuation of perquisites. The idea is completely different. Allowances and retirement benefits are all about exemptions. Both are benefits, of course. Both are received by the employee already. Both are basically taxable. But because certain exemptions are given under Section 10, we will exempt them to that extent whatever is prescribed by the Act. So those are exemption related segments. Allowances and retirement benefits. Perquisites is altogether a different segment. Perquisites is not about exemption. Perquisites is about valuation. So many types of perquisites are there where we need to value them. We need to convert the facility into monetary terms. How to do that? That is what we are going to learn in the segment of perquisites. These are the 3 core segments which will be there in the chapter of salaries, and we should be very clear in their names and concept. First of all, allowances are all money items. Perquisites are in general non-monetary items. Retirement benefits also, of course, monetary items, which will be received in cash. Money will be received. So whatever is received in the form of money, we generally will not have any challenge there. Automatically it becomes taxable. Only if the law says there is some amount exempt under Section 10, we will give that. Otherwise, just automatically it becomes taxable. That is the underlying point always we have to keep in mind. Every time we cannot have a question, sir, is this taxable, is that taxable, is that taxable? Sir, everything is taxable. You don't need to have a question on that. The question is there any exemption applicable to this particular case? If yes, then give that exemption. If no, automatically everything is taxable if it is received in monetary form. There is no additional effort from our side. If any money is received from employer by the employee, no additional calculation we need to do. Automatically all of those things become taxable, except when they are specifically exempted by the Act. But when it comes to perquisites, it is not the same. It is going to be a different challenge for us. We need to value them. Since they are non-monetary in nature, we need to convert them into monetary terms and then include them. Perquisites are to be included in the salary. Exemptions related to the allowances and retirement benefits are to be excluded from the salary. Understand that difference also. So these 3 segments are not same. Retirement benefits and allowances, similarities are there because both are having exemptions. But still differences are also there because allowances are received by a person who is in service. Retirement benefits are received by a person who has retired or who has died. So those are the differences between those 2 segments with a commonality of both covering exemptions only. But perquisites is not that segment. Perquisites is a segment where we need to value them. We need to include that value in the total income of the SASI under the head of salaries. That is the broad outlook of this chapter, divided into 3 different segments. Actually, there is no link between these segments, so it doesn't matter whether we learn this first, that first. Sequence doesn't matter. As long as we know all the provisions related to that segment, it is enough. So we have to know. We are going to know the exemption related provisions also. We are going to know the valuation related things also for perquisites. Exemptions are all contained in Section 10, but the valuations are actually not contained in the Act. Those are contained in the rules. Whatever it is, even though it is in rules, That is part of the income tax law in India, we know that. And we have to learn those rules for valuation of perquisites, which we'll discuss in one of the segments of this chapter. And in addition to these three, there are small two other segments. One is deductions and other one is Provident Fund related provisions. Provident Fund related provisions also we know to some extent, if you remember. At least employer's contribution towards a recognized Provident Fund will be called taxable. It will be deemed to be received, and it is part of the definition of salary also, even under section 17(1). When is that? If that exceeds 12% per annum. So naturally of the salary. So in a year, if the employer contributes to the recognized Provident Fund of the employee more than 12% of the salary, that excess amount shall become taxable. We know that already. That is a major provision which we are going to apply in that segment. On the other side, if the Provident Fund itself gives some interest on the accumulated balance, that interest cannot exceed 9.5%. If it exceeds 9.5% by any chance, that excess amount shall become taxable in the hands of the employee. Though he did not receive it, it is deemed to have been received. So we already touched it in two places, section 7 also, section 17(1) also. So same things will be once again touched in that segment of Provident Fund related provisions. That is one more point. And deductions is one more point. These are the five major segments we can say. Three of them are crucial, crux of them. Remaining two are very small. Allowances is one crucial segment. Retirement benefits is one, and perquisites is one. We will start with one of these segments, and also we'll understand how to calculate the salary in a graded system. Some basic calculations are also required before we start solving the questions. So solving the problems here, of course, is important, but to solve the problem, we need to be thorough with the provisions and thorough with relevant provisions. So we'll start discussing those provisions which will be useful for us in solving the problems of this chapter in the next session onwards. Till then, take care. Bye-bye. Thank you.